The future of work and the question of being able to work from anywhere is amongst the latest trends in business today. In this short series, we look at the tax and non-tax implications for employers and employees of allowing greater flexibility in terms of remote working across international or interstate borders. In this video series, we've covered the implications for employers when permitting their employees to work from anywhere, from an employment tax and non-tax perspective, but corporation tax must also be considered. An employer needs to be alert to the potential impact of having an employee performing duties outside of their home location in terms of potential tax compliance obligations and associated tax costs. So how can the corporate body be impacted for corporate tax purposes by an employee working remotely? Firstly, we need to review the relevant tax agreements between the respective jurisdictions and ask, is a taxable presence of the corporate body created by the presence of the individual and/or their duties carried out there? Does the presence of the individual create a fixed place of business, or do the duties create an agency permanent establishment for the employer? If the jurisdiction in which the employer is working is not a treaty country or state, then have we reviewed the local tax laws to determine whether the presence of the individual creates a source of taxable income for the corporate body? If a permanent establishment is deemed to have been created, or in a non-treaty jurisdiction, presence there results in taxable income, it then becomes a transfer pricing exercise, and we need to work out the attributable profit on which corporate tax will be levied. Notwithstanding the permanent establishment rules, there may still be special cases where particular sources of income, say management expenses or technical assistance expenses, could be taxable in the non-resident territory under the terms of a double taxation agreement. If there is attributable income subject to corporate tax in a jurisdiction, have we understood the corporate tax filing obligations that may follow? Finally, if a corporate tax liability arises in the jurisdiction in which the employee is working, there may be the availability of a foreign tax credit claim to be taken in the home location of the employer. In our work with clients, it's clear that a decision to work from anywhere can have wide-ranging implications for an employer. There can be advantages in terms of employee retention and productivity, plus access to a wider talent pool and new markets. However, there are a number of risk issues to be considered, both tax and non-tax, and this is resulting in many employers creating remote working policies to help assess the risks and to then respond consistently to employee requests to work from an alternative jurisdiction.